What's up you guys, Sasha here, and today I want to talk about the 10 banking laws that currently do not exist, but I really wish they did. This is going to be a bit of a hypothetical conversation. There's a few things that I think touch on real issues that are currently happening in the credit space, in the current account space. I think there's a lot of stuff that the regulators could probably improve on. Let's go through them one at a time, and I'm just curious to see if you guys agree. If you disagree, if you think there's other things that I've missed out on, make sure you leave a comment. Let's get right into it. The first rule that I absolutely think should have already been implemented many years ago, it's still allowed. It is a ban on risk-based pricing when you first go and get any kind of financial services product. What I mean by it is this. You'll go and see adverts for financial products, whether they're loans, mortgages, credit cards, whatever it is, and they'll have a lot of numbers on there with a big APR staring at you, telling you exactly how expensive this product is. It'll be a 3.9% APR, 18.9% APR, whatever it is, it's there advertising to you, telling you should apply because of that number. The issue is that almost half, up to 49% of the people that end up applying and being accepted for the product do not actually get this advertised price. This is called risk-based pricing. The argument goes something like, well, we want to accept more people than just those who would qualify for this particular price. So what we do is we allow a number of people, up to 49%, to get accepted, but we'll give them a much higher rate instead of the one they've actually applied for. So you might have applied for a credit card that is advertised as a 18.9% APR credit card, and you'll get told after the application, congratulations, you've been accepted, except your interest rate will be 27.9%. Click this big green button to go and accept this, and we will send you the credit card in the post. This doesn't seem fair. This doesn't feel right. It doesn't feel like this should happen. The fact that this is allowed is slightly weird. I mean, in a shop, if you find a product advertised for a particular price, you don't go to the checkout and then get told, no, for you, that product is going to cost double, just because we don't like the way you look. Bait and switch is, generally speaking, a practice that is forbidden in most countries and most jurisdictions, definitely forbidden in the UK in terms of fair trading, but within financial services, it seems to be perfectly acceptable. I mean, at the end of the day, the credit card company, the loan company, the mortgage company, they all get to decide who they accept and who they don't. They don't get told that they have to give these products to these people. So why not make it mandatory that if you're advertising a product at a particular rate, that rate has to apply to every single customer that you then end up accepting for that product? Now, I know that the industry will say, well, if this law was in place, then less people would be accepted, but somehow I think they'll figure this one out. Somehow I think they'll figure out how to give the right people the right products at the right price without having to have the shady practice of luring people in with a low price and then switching them to something which is much more expensive. Linked to the thing that I just talked about, let's get to number 2. And at number 2 on my list, I have a ban on repricing existing debt or existing lines of credit. Let me just explain what I mean by this. If you have an existing credit card, this practice is rife. This happens all the time. And in fact, this happens in other products from time to time as well. And what will happen is they'll send you a letter and say, hey, because of some random reasons, because the economy is worsening, because things are tough, we need to increase your interest rates. And we're going to increase them from the low interest rates that we advertised when we first got you onto the credit card to a much higher rate that we just plucked out of thin air. There's no reason that we're going to provide to you. We're not going to explain to you exactly how we came to this number. We're just going to tell you that this is the number you're now going to have to pay. And unless you choose to opt out, cut up your card, have no more benefit of using that credit card or any of the perks that come with it, you're going to have to pay the higher price. The issue with this is that credit card companies, when they make the initial decision on whether they should or shouldn't give you the credit card in the first place, really should be smart enough to be able to determine the probability of the economy going in different directions, the probability of your risk improving or worsening, and bake that into the price that they set. In fact, they already do this. And repricing generally is just there to increase the profits of the back book in the long run. It doesn't really serve the official reason why it exists, which is to match the risk of the customer with the price that is appropriate for that risk. I mean, if they genuinely do go and look at the risk of you defaulting and not paying money back and matching the price that you have to pay to that risk level, how come the people whose risk reduces don't get price reductions as well? I mean, the number of people who get rate reductions on credit cards is absolutely minuscule, so why don't we just ban this whole practice outright? As a side note, some credit card companies have recently started doing something very underhand. They've begun linking the interest rate that you're going to pay to the Bank of England base rate. Now, interestingly, when the Bank of England base rate was much higher, this didn't exist. It only came in when the Bank of England base rate happened to sit just above zero, where the only real way it can go is up. There should be absolutely no reason for credit cards to have the right to go and match an interest rate that you're going to pay to the Bank of England base rate or anything else like that. That should be baked into their calculations, it should be baked into their assumptions. They should advertise a product with a price that you're going to pay for borrowing money using that product and stick with it, full stop. And number 3, I've got quite an interesting one. Everyone should have full access to all the data that is held on them and about them by the credit reference agencies for free. And by full, I mean full. I don't mean the kind of data that you can access today through some of the credit reports where it's very limited. You get some kind of information about your bank accounts, you get some other data in there. This data is absolutely crucial in running your life. This decides whether you can buy a house or not buy a house. This decides if you get accepted for a mobile phone contract or not. This decides whether you're able to qualify for very cheap forms of borrowing or not. This is absolutely critical, and this is data about you. This is specific to you. This is only about you, but you're not allowed to see it. In fact, even if you file for a full access request, you don't get to see the full amount of data that the banks and the credit card companies get when they request exactly the same information every time you apply. So why don't we make it compulsory for every single credit reference agency that has data about you to allow you to access this information and see exactly what the banks and the credit card companies and everyone else gets to see. Every single note on there, every single bit of information that the banks get to make a decision on in exactly the format that they get to see it, as well as any other format that may be more useful, because that will just clear everything up. It will make the system transparent. It will eliminate the computer says no, the black box. It just feels like this should have already been a law a long time ago. I think it's really wrong that today the actual bureaus themselves try to profiteer off this by either sending you this information for a monthly subscription fee. Remember, this is information about you. It is your information that they're then asking you to pay for in order to see it. Or they sell it indirectly to you by sending it to a third party like a ClearScore or a Money Saving Expert or one of those other services, who then make the money by recommending you financial services products on the back of using that information. Whichever way it is, it's just not right. They already sell this information to banks, financial services companies, credit card companies, all of those different people. Every single time you apply and that data gets requested, that company gets paid. Experian is in the FTSE 100. That's how much money that company makes today from all of those services. At number 4, I have a suggestion that's just going to make life so easy for everyone who ever applies for any form of credit. Replace the APR with something that actually makes sense and that customers actually understand. Now hear me out, the reason APR was actually brought in is good. It was meant to standardize the way customers look at different forms of credit and tell you how much one is going to cost you versus another in the same way. So it gives you an interest rate plus fees plus any other different things that you're going to pay. It takes all of those things into a formula and spits out a number which is the equivalent rate you're effectively paying per year. The problem with the APR is this. Nobody actually understands how the APR affects the monthly amount you're going to have to pay or the amount of interest you're going to have to pay. It's just so difficult to calculate. I mean, if I asked you right now to calculate how much a £2,000 loan at 19.9% APR will cost you per month in interest and fees and whatever else that APR includes, would you be able to work that out in your head? I mean, I wouldn't. I don't think many people would. It's pretty difficult. So how do you expect the customer to be able to make solid choices as to whether or not they can afford it based on a number that has no impact on their monthly budget or affordability? The other problem with the APR is that it is based on weird calculations which in most cases are not in any way applicable to the products they represent. Let me give you an example. So the way an APR is worked out for a credit card is by assuming that you borrowed £1,200 for a period of 12 months on the credit card and pay it down in equal installments over that period. That is what they use to actually figure out the APR, but how many people use a credit card in that way? How many people use a credit card to borrow at £1,200? It's exactly £1,200, it's not any other amount. How many people do exactly this? And what happens if you borrow a lot more? What happens if you don't borrow? What happens if you don't pay the interest but you pay the fees? This is a real problem that needs solving because it's just very antiquated and it doesn't do what it was designed to do in the first place. Now there's a lot of different options, but something a lot more simple would be something like, what is the net pound cost per 100 borrowed per month on this product? This is something that literally everybody would understand. It is something that will give you a relative number which will say per £100 you are paying £1.60 per month to borrow it. And it just solves so many different issues. It solves the problem of credit cards where a fixed amount has to be assumed, which nobody will actually borrow. It solves the issue of comparing short-term loans to long-term loans, where short-term loans given for several days or several weeks or a month have incredibly high APRs in the thousands of %. And in some cases, those are slightly misleading in terms of how expensive they really are, just because of the way the APR has to be calculated. So if you really genuinely go and compare things on a per month basis, how much does this cost me per £100? This would make lives incredibly better for the consumer. Let's push ahead and get this implemented. And number 5, I've got one which most people probably don't have a problem with when it happens to them, but in the grand scheme of things, this is a real problem with the way the financial system works, and that is, let's ban any unauthorized extension of credit or direct marketing of credit to existing customers. What I mean by this is, let's say you have a credit card. Every now and then, your credit card company will send you a letter saying, congratulations! We have looked at how well you've been using your credit card and you've been making payments for all this time. We decided that you are worthy. You're going to get a credit limit increase from your £8,000 credit limit all the way to £12,800. Well done. Enjoy it, go and spend the money, go and borrow money that you shouldn't be borrowing. I know you didn't ask us to give you this credit limit increase, but have it anyway. If you don't want to use it, it'll just be there in case you do. And the problem here is this. This type of practice just encourages people to borrow money that they never had the intention of borrowing in the first place. It gets people further into debt issues. It gets people into financial situations they wouldn't ever have gotten themselves into just because somebody out there is pushing you to spend more and to build a balance when you don't actually want or even considered doing it. The same goes for things when you're an existing customer of a bank and you have a current account and they send you letters and messages saying, hey, you pre-qualified for this credit card with this limit, would you like it? You just have to click this one button and we're going to send it to you. I think the world would be a really great place if access to credit was easy and fast and simple, but only when the customer actually requests the credit, not at the will of the bank or the financial services company whenever they decide to give it to you without you actually asking. If a customer has expressly requested to borrow some amount of money, they've gone to their credit card account and said, hey, I'm interested in getting an increase because I need it. Hey, make that process as simple, as easy, as transparent as possible. I'm all for it. But don't do it the other way around. At number 6, I've got one that's probably gonna make you hugely unpopular, probably both with the industry and with a lot of consumers, and that is, let's just ban overdrafts. Yeah, I said it, let's ban overdrafts. There are several different really great reasons for doing it. The main reason is it is just a really weird product that shouldn't have ever existed in the first place. A current account is fundamentally a deposit product. It is a place where you go and deposit your money, it sits there until you need to use it, and then you can draw down from it by either spending on your debit card, taking it out as cash, doing any kind of other transaction, sending it somewhere else. Whatever it is that you choose to do it, it is a depository product. That's what it does. It keeps your money, the bank keeps your money for you, and you can use it for whatever purpose you want, whenever you want. Credit products are a fundamentally different thing. You borrow money from the credit company and then you pay them back according to the agreement and the terms and conditions that you've both agreed to. Now the problem with overdrafts is it mixes those two concepts together and that creates a bunch of issues. First, it is just way too easy to dip into your overdraft and begin paying interest, begin paying fees, begin paying all these different charges that you have to pay. If you wanted to borrow money, if you need credit, go and get a credit product. Hey, let the bank offer you those options if you request it and make it as easy as possible to get. But don't make it part of the same proposition, because now the product that you have where you're depositing money Suddenly, the moment you make a mistake, you forget that you're going down, whatever it is, you're dipping into the overdraft. And those overdrafts are incredibly expensive. Following recent legal changes, a lot of the banks will charge you 40% or even higher in interest just to go and dip into that overdraft. And you might think, I'm only going to be down there for a day or two. I might only need to borrow a small amount of money. But then another bill comes in and you pay that as well. And then suddenly you're in there for a week or 2 weeks, or you're just waiting for the next paycheck to take you slightly out of your overdraft so you can then dip right back into it. It doesn't feel right. In fact, a lot of the customers who are paying this amount of money would probably qualify for credit at much, much lower rates if they took any other form of credit out. If you went and got a credit card, if you went and got a loan, if you got literally anything else, you'd probably be paying much less. The vast majority of people paying for overdrafts would probably pay much less. So why don't we just ban this practice, which is purely predatory, purely exists to make a quick buck on customers who like the convenience of it. It doesn't effectively price for risk, it doesn't effectively price for anything, it's just there to make a load of money. The interesting thing is, if you have a credit card or a loan or any other line of credit, any other kind of credit product, it is actually illegal for you technically to carry a positive balance on one of those products. So what this means is you can't go and pay into your credit card a lot more money than you actually owe them to carry positive balance. If you were ever to do that, they will send you letters, they'll contact you, they'll try to send the money back to your account because it is not allowed. So how come it is okay the other way, which just so happens to be the way that the banks and financial services companies make money? We've got to number 7, and at number 7 we've got an old favorite of mine. It is going to be incredibly unpopular with every single credit firm out there, but it will help consumers a huge amount. Let's make it compulsory to tell the customer exactly why they were declined for a credit product at the point when they're declined. The general computer says no explanation that you get given when you get declined is just simply not good enough. You've gone through all the hoops, you've gone and filled in the application form, you've given them all the information about you that they wanted, you've gone and hit that button to apply, and then they decline you, but they're not going to tell you why. And you have to go and guess, you have to go and get your credit reports, and you have to think, maybe it was this, maybe it was that. And I get it. Every credit company out there thinks that the scorecard and the credit policy they use is some kind of secret sauce. Their credit team is so smart, they developed such a complicated algorithm that this is what stands them apart from everybody else. The truth is that the vast majority of the credit policies that all of these different companies use are incredibly similar. And even beyond that, laws exist to protect the consumers, they don't exist to protect the financial services company from keeping some kind of secret sauce. And why would it be bad to tell the customer, hey, you've been declined because you currently have too much credit. You currently have £20,000 in credit card debt, and we don't accept people who have more than, say, £15,000. Now, a lot of credit companies will say, well, this is very difficult to do. We have these complicated scorecards which give you a score on the back of dozens of different data points, and they increase your score or decrease your score based on all these different data points, and that final score determines whether you're accepted or not and what credit limit you get given. But hey, that just doesn't really matter, and to be fair, that isn't a valid excuse. Sure, their credit policy may be quite complicated, but what they'll have to do is they'll have to dig down into the way that their score generation process works. They'll have to tell you, hey, you scored minus 20 points for this variable and minus 30 points for that variable, and that's why you got declined. However it is that they have to explain to you as to the main variables, the biggest factors that impacted your application and how they could have been different for you to be accepted, they'll just have to figure it out and give it to you. Hey, I don't see what the real big downside is. Customers will know exactly why they got declined. The system will be transparent. Customers will be able to improve their situation. People will be able to get better at managing their credit and know exactly what is good and exactly what isn't good. So let's just push ahead and do it. At number 8, I have a complete ban on complex pricing of credit cards. And this can be quite difficult because not everyone really understands how credit cards work, but fundamentally that is exactly why it needs to change. Today, credit cards have up to 4 different balance categories. In some cases 5 when people have installment loans as part of their credit card product, but normally it's up to 4. You can have purchases, you can have balance transfers, you can have money transfers, and you can have cash. Each of these carries a different interest rate, and they also carry different fees. So typically for purchases there isn't a transaction fee, but for the others there is. Every time you withdraw cash from a cash machine, a fee is applied. Every time you do balance transfer, a different fee is applied. The problem here is there's so many different fees and interest charges that the average customer will never be able to fully understand how expensive all these different things are. And that's exactly the reason why this exists. Secondary issues that arise out of this is things like payment allocation. So every time you pay into your credit card, there are rules around what that payment has to go towards. And in many cases, these rules are good. They tell the credit card company that they have to apportion the payment to the highest interest-bearing balance first. The problem with this is that promotional rates are not taken into account. So let's say you have a credit card, you've taken out a credit card and you've done a balance transfer onto it of £10,000 and it is at 0% for 3 years. Let's say then at some point in the future, you've just gone and spent £100 on that credit card in a shop. It is a purchase. Let's say your balance transfer rate is higher than the purchase rate, which is almost always the case. When you make a payment, the payment will actually be applied to the balance transfer because the normal non-promotional rate is higher than purchases. And what this means is every time you pay, you'll be repaying that 0% promotional balance that will not incur any interest for the next 3 years, and the £100 purchase just sits there earning interest month after month after month. Now, I know that in some cases this actually works for the customer, but why don't we just simplify the whole thing down? Force credit card companies to abandon this practice. This practice should have never been allowed in the first place. It is way too complex and it is impossible to understand. Make every form of credit have one interest rate and one transaction fee, regardless of how you spend it. So if you don't want people to pay a fee every time they spend in the shop, make that fee 0 and make it one interest rate that you're happy with that covers all the different costs that you have, and make it consistent regardless of how the customer uses the credit card. Hey, if the credit card company doesn't want their customers to go and take out cash because they say it's too risky and that's the reason why the price is high in the first place, well, don't let customers take cash. Just block that transaction. Don't let customers withdraw cash from a cash machine. It's very simple. If you don't like the risk of money transfers, well, don't do money transfers. I mean, it's really simple. If you would like to produce a credit card that is only designed for withdrawing cash from a cash machine, well, create a credit card where the interest rate is equivalent for that risk and introduce the fees and see if customers want to use that instead. Just don't do what you're currently doing and bury all this in the legal text that nobody will ever read, and then keep charging these different fees and interest to customers who don't really understand exactly how they're calculated. And number 9, I have something that will probably annoy a lot of people who use credit cards the right way, which is they go and use them for all the perks and the cash back and the points and the benefits they give and don't pay a penny in interest. But if you take a big step back and just go and consider what credit cards are actually for and how they make money, this is the right step. And the step is this: ban any incentive on a credit card which encourages spending. Just have a think about it. Today, credit cards are trying to get you to spend for whatever means possible. And the reason they do this is if you spend enough, you're going to get into so much debt that you won't be able to repay it, and you'll begin revolving the balance and paying interest. That's it. That's the only reason all of these things exist. It's not there because they're your best friend. They're not just giving you free cash back, free points, air miles, whatever it is that you like collecting. It is there so that you borrow so much money that you begin paying interest. That's the only reason. That is the truth. There's so many offers out there which will encourage you to spend thousands of pounds when you first get the credit card. Hey, spend £3,000 or £5,000 to get some initial number of promotional points. And a lot of people will really get taken in by that. Hey, what about all these cashback and points offers? So for every pound that you spend, you get so many points thrown at you. And there's tiers. If you hit the next tier, the rate at which you earn the points increases. And if you hit the tier after that, it increases again. This is just insane. We have a culture where spending and getting into debt is actively encouraged by giving you little tokens that make you feel good. This is plain wrong. If credit card companies want to give you free perks, give you lounge access, whatever it is that they want to give you, I'm all fine for that. Just make the perks completely separate from the spending. Don't make them dependent on the spending, or dependent on how much you spend, or dependent on your balance size. Just make the perk available whenever the customer wants, without any requirement to spend, without any requirement to build balance, if you feel like doing so. Rule number 10 is something that I think will really change the way credit works, and is a little bit out there, but hear me out. I think this can be a real game changer, and it is ban the practice of charging more for an amount of money than the amount of money that you have borrowed. Now, some rules that are similar already exist. For example, for credit cards, the FCA have introduced the persistent debt rule, which means that for an 18-month period or a 36-month period, depending on which part of the rule you're reading and how you interpret it, you're not allowed to charge more in fees and interest than the amount the customer has repaid off their debt. But I think this law needs to go much, much further and not only be for credit cards. If you lend somebody an amount of money, charging them more for borrowing that money than the amount you've lent them is just predatory. It shouldn't exist. I don't know, maybe some people have a bar a bit lower than that. Maybe they have it at 50% or whatever, but let's just agree that there should be some kind of limit as to how much you can charge for an amount borrowed. And this should apply to everyone from the loan sharks and all these different payday loan companies, which go and charge you fees on fees if you revolve the balance, if you carry it into the next month. And it should go all the way through to mortgages. It should go through to other products. Now, mortgages are a special kind of product. People have them for 25 years, 30 years, sometimes even longer. And over that period, if the average interest rate is something like 5%, you're going to be pushing that boundary of paying more in interest than the amount you have borrowed. But hey, for the sake of argument, why don't we allow inflation to be used in this? Because this will solve the problem for mortgages, but for all the other forms of credit, which are much shorter, which are measured in months or sometimes in a few years, let's just ban this practice. Now, some people say, well, there are people whose risk says that we have to charge them more. Now, I generally do agree with that to some extent, but a lot of this is just so predatory that there should be some form of protection for the consumer that stops the practice where you're being charged way too much. If you can't design a product where you're charging less for the product than the amount you've actually given to the customer, you shouldn't be lending to that customer. The moment that you have collected a sum in fees and interest and any other charges that are applicable to that product that are equivalent to or greater than the amount the customer has borrowed, all charges should just stop. The customer should then have the right to repay the amount they've borrowed at the same agreed minimum payment or average monthly payment or whatever it is over the same period that they would previously have paid, but without paying any further interest or fees or any other charges unless they decide to borrow more. Now, I've just come up with these this morning. I thought, hey, these are some really great rules that would be amazing for customers if they existed. They would really revolutionize the financial system. They would make credit products and general banking products a lot more transparent. Tell me what you think about these in the comments. If you like this video, please make sure you give it a like. A like is so important for the YouTube algorithm to promote the channel, to reach more people more quickly. We're still very new, so every single like counts. If you're interested in this type of content, if you're interested in videos about personal finance, about making more money, about making more with the money that you do make sure you subscribe to this channel and hit the bell so you get notifications every time one of my videos comes out. And I'll see you guys later.